Hey traders, Jason here from Love Brothers. So in this video I want to talk about gold, its movement, and what it might mean for the market. Okay, if you've been following the market, you know gold has done really well. Gold, the metal, is up like 50% just in the last year or so. A lot of gold stocks have done fairly well, but it's mostly the commodity. And so the question I ask myself is that, does that mean anything? Is it just a random group like semiconductors or housing or this or that's moving up? Or is there some sort of deeper meaning? So I went back in time to look at other times that the gold has moved up to see what happened in the market. And the message that we're being told is not a really good one. It turns out that gold is actually a pretty good safe haven. The market tends to sniff out problems in the market. And when money flows into gold, the market tends to suffer afterwards. This is not a timing indicator. Okay, just because gold moves up, you can't immediately go short, sell everything, go short. You can't do that because the timing is not even close to being that perfect, but it does issue somewhat of a warning. So let's go through some examples. All right, this is gold, 1970s here highlighted. You can see this is 71. It moved up slowly. 72, it ramped up fast. You can see 73, it also ramped up fast. So anyways, gold went from 3, 4, 500 to well over 1,000 in that 1971, 72, 73 time period. What happened afterwards? This is the S&P 500, 73 and into 74. Okay, huge drop. Market got cut in half. So gold moved up first for a couple of years, posted a big gain. Then afterwards, the S&P 500 got cut in half. Here is gold in the late 70s. You can see it moved up slowly, but then it really ramped up here. Gold went from $1,000 here in like 1978, 79 to almost 3,000. So it almost tripled in a relatively short period of time. This again is late 70s. What happens after that? Here is the S&P 500. In the early 80s, we got a pretty stiff bear market, and then starting in 81, the market had suffered an even bigger drop, and that drop lasted about 18 months. Okay, so first gold moved up, then the S&P 500 eventually moved down. Fast forwarding a little bit, here is gold in 2007. You can see where it moved up in 2005, flatlined, and then it shot up again. This move over here is from 1,000 to over 1,400. So we're talking about over a 40% drop in 2007. We know what happened after that. The S&P 500 suffered a huge drop. The financial crisis played out. The market got cut in half. Fast forwarding a few years, here is 2010, 11. So you can see gold steadily rose for a couple of years. Looking at the S&P 500, what happened? We had a bear market in 2010 and then an even bigger bear market in 2011. Moving forward, 2020, this leads up to COVID. Gold did very, very well. 1,600 or so here, 1,500 there, 1,600, and it moved up over 2,000. So a nice run here. The consolidation pattern here breaks out, runs up, and of course we know what happened after that. COVID broke out, and the market suffered a pretty stiff 2-month drop, as you can see. Then we fast forward to today, where gold had bottomed in 2022, bottomed again in 2023, and gold is up like 50% since that 2023 bottom. S&P chart, here's what we have so far, just a 10% drop. Okay, so again, not a timing indicator, but if you go back over the last 50, 60 years, every time gold has run up, it's sniffing out problems. Okay, there's issues within the financial community, industry, not community, but there's issues out there financially. Gold sniffs it out. Gold, gets bought up. People are moving into gold because they view it as a safe haven. and then typically trouble follows. So the fact that gold is up right now, up like 50% in the last year, it's great for gold stocks. They've done all right, not fantastic, but they've done all right. They've been good trading vehicles. It's been great for gold, the metal, but it kind of warns us that there's probably trouble somewhere in the pipeline in, looking forward. Okay. It could be in 2 months. It could be in 6 months. It could be in 8 months. We don't know. Again, this is not a timing indicator, but it does tell us there's probably going to be some trouble at some point in time in the next year or so. All right. We'll see you next time.